Hello there. You're listening to Linda Pinizzotto of The Condo Expert. And wow, I'm going through all of these different comments that we've been talking about with Conrad Kopacz and the investment advisor of Chippenham Financial Group. So get it. Okay, you got to write it down. Come on now, because you know what? The cost of your mortgage is too high and it's reducing your cash flow. There's things that you can do. There's also ways you can get better interest rates on your money, as opposed to just leaving everything in your property, although your rates are low on your property. Hey, why not gain on the difference? Now, another subject, Conrad, we talked about self-funded pensions. Mm-hmm. And I know that, we're going to spend some time on the senior end of it because, that's the time when I guess seniors have to take a look at what kind of cash flow can they bring into the picture. Aside from just looking at pensions that are coming from the government. Because, there's all talks out there as to by the time that we're that age, are we going to even get a pension? I don't know. I mean, the way we're going right now with our politicians and our whole economy with respect to government, I got to wonder. I don't know. Every time I turn on the radio, I'm hearing something different.
I'm sure you'll get a pension, but it'll be smaller.
That's
and
the
smaller
thing.
And smaller. And the cost of living will go higher and higher and higher. And how long you live will also get longer and longer and longer.
Well, look at the conflicts that are going on right now with this whole gas plant, billion-dollar loss and everything else. I mean, I don't know. I think Canadians got Ontarians, as a matter of fact. I mean, they got to take a look at this whole picture.
Oh, definitely.
We need good, strong leadership that doesn't waste our money. So, but that's another token. We're not getting into a...
Good luck. Good luck.
That is true. No kidding. But self-funded pensions. So we forget about what the politicians are doing. We all try to protect ourselves right now. What does the person do aside from giving Conrad Kopacz a phone call at 416-627-6059 or the office number 905-332-6448? What would you recommend, Conrad?
Well, when we were talking about before about how to pay off the primary mortgage off quicker because it's not tax deductible, once that is paid, what we enter in is a self-funded pension phase. People that don't have a mortgage can obviously go straight to that phase, but that is still far and few in between that's the case for. What that entails is, as we told you, to take equity from your home and use it as a tax deduction, and then use leverage from TD Bank, which is non-marginal loan, meaning that if there's adjustments in the market, you don't have to top it off, pay anything extra if the equity goes below the loan value. What happens is that you set up a self-funded pension, and how it works is you have your loan. So think about it. You put $100,000 from your home equity as a down payment. Think of it as a rental property. Down payment. You took a $300,000 investment loan, but think of it as a mortgage, and you bought a $400,000 asset. This $400,000 asset is paying you rent in a tax-efficient way, an 8% distribution. That 8% distribution now goes to start paying off the mortgage/investment loan, just like a rental property. So what you're doing is you're having the money work for you to pay off that debt. Now, this debt takes, at these current interest rates, it would take about 12 to 15 years to pay off. So what you're having, instead of, John Smith being your tenant, you have RBC, TD, Enbridge, Walmart, Rogers, large companies that are paying you that income to pay off that loan. And what we're having is, when you pay off your mortgage, now you have that cash flow, which you can actually put towards RSPs or other types of investments sooner than you would have if you were paying your mortgage for 25 years. But you also have this pension that is self-funded. So for people that are actually getting closer to retirement, the best way is you have this thing paying itself off, and when you enter retirement, you start using your own money for your retirement needs, and you just have this thing in the background paying itself off.
So tell me, if the banks, the TD and Rogers and all of these companies, I mean, multi-billion dollar companies, are willing to pay out 8%, I've got to admit, the curiosity behind it is, what are they using the monies for in order to, is that for development of their business? It's development, it's maybe re-lending the money out at a higher interest rate elsewhere outside of the country? I mean, that's got to be a question that's on
Okay,
everyone's head.
definitely.
So, okay, that's great. So I'm getting 8% from them, but what are they getting from the money? So that's interesting.
Okay, so those big companies are not the ones that are paying 8%. It's the way the fund is structured. So why it's tax efficient is, think about it, the most simplistic way of saying it is, you're getting your own money back first. And the dividends that like those big companies pay, plus the growth, gets reinvested in the investment. So you basically have to split the investment into two portions. One is where it's making the money from the market, and one where it's your money, your own capital. So that 8% is derived from your own capital, while this thing is replenishing itself.
And then, therefore, it's diversified with enough companies involved in it that there would be a safety element.
Yes.
That's why you're saying that it's a medium risk.
It's low to medium
risk.
Large
Right.
companies. So, I mean, people ask me, so what's my biggest risk? And I joke with them and I say, you could lose all your money.
I don't know that that's a joke, though.
To me, it is, because
I think somebody would be jumping right out of their socks if they heard that. They'd be,
funny
"Whoa, wait a
enough, they
second,
don't. They
Conrad."
don't. They're kind of shocked that I actually say it.
You say that, yes.
But it's not a realistic risk. So if all the big banks in Canada and all the major corporations in Canada and the US that we invest in went bankrupt, that's the only way you lose money, if they go bankrupt. And if they went bankrupt, do you have a currency at that point? Do you have maybe a gun to protect yourself? Like, it would create a complete different society.
Well, if they went bankrupt, even the money that's sitting in your bank at 0.0%
But no, but that's
is lost as well, really. I mean, to some degree.
there's no
Like,
currency
you've
at that
got-
point.
Right, yeah.
You know, you're bartering
Exactly.
with bread and
Well, now we're
milk.
talking about a major depression. I mean, there was a major depression, like way back, in the 30s, I believe?
Yes,
And,
but
you
the
know-
thing is, the currency still was there.
Of course.
So what happened in the Great Depression is they didn't print money to try and save it. They hoarded it, and they let all these little banks, all these regional banks in the U.S. collapse. And it created a massive panic, and then they didn't lend out money to other, factories to hire workers or anything like that. They completely strangled supply. And in 2008, instead of strangling the money supply, they just started money to try and feed the system, to try and heal
Right.
it. So it was two different things. Maybe
Well,
the
I
same
think
thing
opening the
caused it.
gates to, we've got open gates to immigration. We've got, we do have an awful lot of, that's the reason why we're seeing so much construction in the condominium world, not just as an investment, but also newcomers coming into the country, bringing in different people from all over, brings in a different type of, not only a culture, but maybe a different set of knowledge, different types of employment standards, different things that will actually, aside from the multiculturalism, what it does is it opens the door to just other ways that people live and so on. Like, for instance, I was in China in October, and I went into the electronics stores there in Shanghai.
I was in
I was
Shanghai
blown
too.
away. Were you? I was blown away. We
I
don't
actually
have
went
that
in
yet.
2008.
Really? Yeah. And I'm thinking, this is really interesting. Now, in Beijing was completely different, but in Shanghai, there was things there that I've never even seen.
A friend of mine bought a mini iPhone. Doesn't exist. But they designed a mini iPhone. He brought it to Canada. Didn't work on our network.
Really?
Yeah.
So now we're probably a year or two, behind with all
Well,
of that. So every time we bring in, new immigration, we're actually bringing in a completely different mindset.
I would say, though this is getting a little off topic, until Canada recognizes education and experience that they're bringing over, it's never going to work as efficiently as it should. Because right now, there's certain, for example, a doctor, we need doctors, right, in Canada.
Exactly.
And I meet somebody that comes from a different country and is rocket science, but he can't get the same qualifications, even though the person's brilliant.
Oh, I had that
And-
actually, a client of mine from Lebanon. Amazing dentist, amazing in Lebanon. When he came here, they did not recognize his credentials. He had to go all the way back to school again
Yep.
and get his credentials again, which it was easy enough for him to do, but the time span to do it. Started his own practice and all, and incredibly successful dentist.
But that's the thing. Until
Yeah.
that changes, then when it changes, Canada will move forward.
Well, that's why, because I think that there's a lot of things that we can adopt, just from different countries. I mean, heck, they even in Shanghai, they adopted the Magnet train, which is German technology, 431 kilometers an hour. That was insane. We were on there. Did you go see that?
No, I didn't.
Oh, you missed it? Oh,
I
no, you
missed
got to
it.
go get a plane ticket, go back to China.
One day. There's a few other
But
things on
there
my
you-
bucket list.
But what you're talking about is totally, I know we're a little off track, sort of, kind of, because, newcomers coming into the country, the show will be excellent for them because they'll understand different advantages out there in the financial, world of investments, really.
Yeah. But
You
when
know?
we met the first time a few years ago, the topic that brought us together is I told you that I was an advisor to one of the individuals in Queen's Park, one of the leaders of the opposition.
Mm-hmm.
So I looked at how it affects the financial services industry. So there's so many things we could talk about politics in that sense. But I wanted to just kind of come back because I said, the risk is losing all your money, which is, it's not the realistic risk. The realistic risk really is you not following the plan. So if we're giving you extra cash flow by creating a strategy that is tax efficient cash flow, you're getting real tax deductions, tax refunds. If you're taking that money and now going to Vegas or living off of it instead of paying off debt, that is the most realistic risk.
Oh, absolutely.
In our whole
Without a doubt.
strategy.
Absolutely. Well, I think that what people have to do, Conrad, is give you a call. What really concerns me, if you said to me, okay, Linda, what is something that really bothers you? And what really does bother me is the countless calls I get from people who do not have a lot of equity in their condominiums because the maintenance fees have gone out of control and it's reducing the values of their unit. So, while they thought they were on a steady flow to keep having, say, 4 or 6%, 8%, whatever the case may be, of increase every year, because the maintenance fees have gotten so high, the marketability of the property has actually taken a drop, therefore reducing the value of the property. So if people don't take other alternatives similar to the things that you're suggesting, and that your company stands behind, which is Chippenham Financial Group, and today I'm speaking to Conrad Kopaz, who's an investment advisor, I think people will fall behind the wayside if they don't pay attention to these type of things, because some investments are not good investments in the condo world, and that's that has to be brought to the forefront so people will understand where they're at and plan for the future.
Well,
You know?
definitely. The one thing that, at least on my side, what I see, and I agree 100% with what you're saying, is people putting their absolute blind trust to their local bank. The bank makes money off taking your money and lending it to other people at a higher rate. And if your biggest burden in life is usually a mortgage, and they make their most money off giving debt out to people, their interest is not aligned with your interest to pay off your mortgage quicker. And what I tell people is, think about that, and do you think they're going to tell you how to pay it off quicker besides do semi-monthly payments or, bi-weekly payments? Besides that,
Exactly.
are they going to really help you to want to get rid of something that is the biggest money maker for them? So I challenge people to really, open your eyes, see that there's other alternatives. And I'm not saying this is the best thing since sliced bread, but if you seek a qualified professional, they'll be able to help you, at least guide you in where the possibilities lie. And then really it comes down to you as an individual and as your family, what you want to go and do. because some people are not disciplined. So no matter how much you say to them, the sky is blue, they'll say, no, it's black. It doesn't matter. So challenge yourself to say, you know what? It's true. The bank is just, they'll lend me money hand over fist and let myself go into debt as much as possible without, blinking an eye, because that's how they make money.
Mm-hmm. Oh, 100%. And, I think for the general public out there, pay attention to your finances. Like, seriously, get involved. Even if you don't know this information, the idea is to tune in to the show and then you'll learn some of it. Your next step would be to contact Conrad Kopacz, who's been kind enough to be here on the Condo Expert today. And Conrad, do you want to shout out your email address?
Sure. It's KKOP as in Peter, ACZ at chippingham.com, and you could also reach me on my mobile 416-627-6059. Thank you for having me.
Well, you're welcome. Thanks so much for coming on the show. Today's been interesting. On the Condo Expert, I try to give you a lot of different subjects. Granted, it is called the Condo Expert, so we try to throw some information out there to condo owners, strictly because, you're a little bit more volatile. I don't know whether or not you believe it, but believe me, you better start believing it. You are volatile. You are volatile to what is going on in that little room with your 3 or your 5 board members and your property management companies, because at the end of the day, the maintenance fees, the budgets, the operating of your building and your condominium depends on their voice. Maybe not yours, depending on what's happening, especially if you're not in the forefront. So today I decided that the idea is to bring in more financial opportunities out there, gain more knowledge, and certainly, consider contacting Conrad Kopacz of Chippingham Financial Group, because I'm sure they'll be able to give you some really sound advice and services. Again, you're listening to Linda Pinizzato at the Condo Expert, and we'll be happy to answer any questions. You can email me at any time, linda@lindapinizzato.com. Have a wonderful day. The sun is shining. We'll talk to you soon. Bye-bye.
Using borrowed money to finance the purchase of securities involves greater risk than using cash resources only. Potential losses could exceed the amount you invested, and you may sustain a total loss of the initial funds deposited by you plus any amount of the loan that exceed the total market value of the securities. Past or historical performance of any security is not an indicator or guarantee of future performance or returns. You should not borrow to invest if you have a low tolerance for risk. You will be dependent on the income from the investments to pay daily living expenses, or if you have no way of repaying the debt if the income from the investment declines or stops.
Linda Pinizzato guarantees that you have the real estate knowledge you need to make the right decisions. Call Linda Pinizzato at Sutton Group Quantum Realty, 416-561-7373, or visit her at lindapinizzato.com.
Oh, my computer crashed.
Oh no, I've got a virus.
No way, no internet connection. Do you need help? Call IT Mayday. 647-977-7113. itmayday.com.